regarding the 6-in-1 course on complete guide on investment banking. So for all of those for whom it's a first session, so hi, my name is Maura Hanspal. And for all of those who have been attending the previous session, so welcome back once again. So this session is completely dedicated towards some of the most important doubts which I feel are important to clarify to all the students. So for all of those who are like attending this session, around like 200 to 250 participants like connected from all the Zoom calls here, like those would be like benefiting from all the doubts and queries. But for all of those who have not attending the sessions can watch the recordings because they would be uploaded on the website directly after the session. Okay. So the first doubt, let me just present the whiteboard. And the first doubt that was asked to me, like a few doubts were there and all the doubts are like interlinked to each other. The first doubt that was asked to me was regarding the CAPM model, the capital asset pricing model. And this model has been talked about in a separate module in the session. The CAPM model is used to calculate your cost of equity basically, right? And the formula for the CAPM model it's used to calculate the cost of equity, which is represented by KE. And this has been discussed, your RF plus your beta into your RM minus RF. RF is the risk-free rate, B is the beta, and RM is the return on market. And the difference between the return on market and the risk-free rate is the market risk premium. The CAPM model has been discussed in detail in the modules. So I won't be discussing that right now because that would be consuming a lot of time. All the assumptions, all the implications have been talked about. So for all of those who do not understand what exactly I'm talking right now, just go back after that session and watch the modules and you'll understand that in core. But for all of those who have watched the session, who have like watched the sessions on CAPM model, they asked me, जो beta हम यहाँ पे use कर रहे हैं, how to calculate this beta, and is this beta the levered beta or the unlevered beta? The first doubt was how to calculate this beta, and is this beta the levered beta or the unlevered beta? By the levered beta, we mean that the company has both equity and debt with it. The company is levered, company has taken debt. But the unlevered beta is something the company has no debt and just equity. So that is the basic difference for all of those who did not understand that what is the difference between the levered beta and the unlevered beta. Now in the CAPM model, in most of the scenarios, we tend to use the levered beta. Just remember this and just put it in your hard disks. We use the levered beta. That is, we are taking into consideration the debt component also. Okay. In 90% of the cases, the company would be using the levered beta to calculate the cost of equity. All the top financial analysts, top companies, top investment bankers use the levered beta only. How to calculate that levered beta? Again, that has been shown in the modules. We have a separate session on risk and return analysis, and there we have calculated the beta by using the slope function in Excel. एक slope function होता है Excel में, it's an inbuilt function on Excel, and this has been taught clearly in the modules uploaded on the website. Specific session on risk and return analysis is done, and beta has been calculated. So what we have done in that session, we have downloaded the historical stock prices of a target company and the historical prices of that benchmark. The benchmark can be your Nifty or Sensex. So now we have the historical prices of both our target company and the Sensex. And then we calculated the holding period return or the percentage change in return on the basis of the stock prices. So हमारे पास we got the holding period returns or the percentage change in prices of our stock also or target company and the benchmark also like which is your Nifty or Sensex. Then out of like using both those returns, we calculated the beta, and that has been shown clearly in the modules. Has anyone watched the modules? So type a yes or no in the chat box if anyone has watched the CAPM module and the risk and return module, in which I have like told specifically that how to calculate the beta by taking the returns of the stock, because that is time consuming and that is why a separate modules have been like made for that. Yes. So many yeses. It sounds good. Like for all of those who have been watching the sessions, I'll be watching it soon. Okay. So like then watch it soon, because a large number of students might have enrolled in the previous week also, or they might have enrolled just yesterday also, or might have enrolled just like this morning also. Okay. So do not panic, just watch the modules, and this recording of the doubt session will also be uploaded there. Okay, so this is how you calculate your levered beta. But the question arises, how to calculate the unlevered beta from the levered beta? There is a specific formula that we use to calculate your unlevered beta from your levered beta. So one difference is quite clear, that whenever we talk about levered beta, it takes into consideration your debt component. Okay, that debt component has been taken into consideration, like whenever we are calculating the levered beta. I'll just remove all this or go to the new screen altogether. Yeah. They might give you the value of the levered beta, and they might say you to calculate the unlevered beta from the levered beta. That is, derive the value of the unlevered beta from the levered beta. And why do we do it? I will tell you. Okay, so first let's just write down the formula. So if you want to calculate the unlevered beta UL में लिख देता हूँ short में. The unlevered beta. How to calculate the unlevered beta? It is nothing but your levered beta. But levered beta is also called your equity beta. It is the other name for that. So if someone is using equity beta, then do not get confused that you don't know that. The unlevered beta is also called your asset beta. They're both and the same thing. Okay. So it is, the unlevered beta is nothing but your levered beta divided by your 1 plus, I just noted down, I'm writing down the formula. Unlevered beta, we can just like save the formula somewhere because it's physically impossible to remember all those formulas. 1 minus 1 plus tax rate into your debt by equity ka proportion. That is the debt to equity ratio. What is the debt to equity ratio? Again, all the ratios from A to Z have been talked in the modules. In the subsequent sessions, like maybe next week or next week, like we'll be talking about some more intensive ratios as well, which have not been discussed in the modules. Okay, but as for now, it is the levered beta, which is also called the equity beta, divided by your 1 minus 1 plus tax rate. The tax rate would be given to you in percentages into the debt to equity ratio. Okay, that debt to equity ratio will be given to you like for the company, or that ratio you people can find out. How to find out? We know it already. Okay, so this is the thing. And why to calculate the unlevered beta? So as I told you in the starting of the session, the unlevered beta is something which excludes the impact of debt. It just takes into consideration that the company just has equity. So why do the company use this unlevered beta? See, if you are calculating the cost of equity for your own company and not comparing your company with some other company, in that case, it's good to use the levered beta if your company has both equity and debt. Okay. The second scenario is if your company only has equity. If your company only has equity and no debt, your levered beta will be equivalent to the unlevered beta. बात तो एक ही होगी. The third scenario, when you are comparing your company with some other company, like for example, we have been talking about Nestle India from the very first session. Okay. So for example, we are comparing Nestle India with other fast moving consumer goods industries within the same industry, because you have to compare your target company with a similar company within the same industry. So you can compare your Nestle with HUL, with Britannia, with Marico, with Dabur, right? So when you are comparing all these companies will have a different debt structure. Not all these companies will have a common debt structure. Like some company will have 20% of debt. The other company might have 30% of debt. Some company might have 90% of debt, right? So for the sake of an equal comparison, we tend to use unlevered beta. Because when we are using the levered beta in comparing all these companies, our final answer can be distorted because all these companies are not having the same level of debt. Some is having 20%, some has 30%, some has 90%, right? So when you are comparing all these companies all together as a financial analyst or as an investment banker, like wherever you get the job, you have to always unlever the beta. We call it as unlevering the beta. You have the value of the like the leverage beta, which you people can calculate from the risk return, like the whole module has been shown, that you have to unlever it. People tend to use these terms that we are unlevering our beta. And we as layman, we don't understand ki bol kya rahe hain. Okay. So the main reason they unlever the beta is they want to make an equal comparison between all the companies that might be having a different debt structure. So when you are comparing that all the companies and within the same industry, always use unlevered beta. In that case, your unlevered beta will be used in the CAPM model and not the levered beta. That one thing should be clear to you. Understood? And how to derive the unlevered beta from the levered beta, we know it. The tax rate would be given to you in the question, like we know it, and like in the annual report of the company, 30% or 32%, as like whatsoever the country is. And where it is mentioned, we know it, like in the notes to accounts, we have done it previously. And debt to equity, we know that how to calculate. Understood? Give me a yes or no. Yes, yes, yes. Great, 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 great. Okay. एक भी no आएगा ना, so I'll stop and explain once again. Since I'm not receiving any no's, I received like 50, 60 yeses, I guess, right now. Okay. The others can also respond. Yeah. So I'll stop and explain it once again. Okay. Even if it's a single no. ठीक है, तो अगर सब yes बोल रहे हैं, so don't get panicked. Okay, like everyone has said yes, and Mora like won't be explaining us in that scenario. Even if there is a single no out of 200s of yeses, I'll explain the topic once again. Okay. Yeah. Now the question arises. Somebody asks me that how do we calculate the WACC or the weighted average cost of capital? Weighted average cost of capital. So that has been discussed, but I'll tell that once again. Your weighted average cost of capital क्या है? Your weighted average cost of capital or the overall cost of capital भी बोलते हैं, is nothing but the minimum return which all the capital providers are expecting from the company. For example, I purchase the equity shares of a company, so I want a percentage return, 13%, 12%, 15%. I might have purchased the debt of that company. It means I might have given loan to that company, so I want a certain return in the form of interest rate, right? So basically, we take into consideration both the debt component and the equity component and the minimal return which both the debt holders and the equity holders are expecting from their investments. The formula comes out to be your weight of debt into the cost of debt plus your weight of equity into the cost of equity. We know that how to calculate the cost of equity by using the CAPM model. People ask me how to calculate the cost of debt. No need to calculate the cost of debt. It's mentioned. It's nothing but the rate of interest like which the company is paying you. Like for example, if the company has issued a bond or a debenture, the company would be specifically mentioning that I am issuing this bond for 5 years from now and guaranteeing a 10% rate of interest. That 10% rate of interest is given to you. So you need to calculate, that's handy for you. So that's nothing but your cost of debt. How to calculate the weight of debt and weight of equity in the capital structure? Basic common sense. Your capital structure comprises of what? Debt plus equity, right? Then how to calculate how much proportion of debt is there in your capital structure? The amount of debt divided by the total capital structure. Simple. And the same goes for equity. Debt is nothing but how much percentage debt is there in your overall capital structure, which comprises of both the equity and debt. Similarly, how to calculate the percentage of debt or weight of debt? Equity component by debt plus equity. That's it. Debt ka amount like you people will get in the annual report of the company. Equity you people get in the share capital. Now the question arose, equity hum kaun si le? Take the total equity, your share capital plus the other equity here. Total le lo. Okay? And how to get debt? Debt is the component of the long-term borrowings. Like when you are seeing the non-current liabilities of a company, you have long-term borrowings. You might have some deferred tax liabilities. You might have some long-term provisions. ये सब क्या होते हैं? They have been discussed already. So you do not have to use the total of non-current liabilities. Total non-current liabilities use नहीं करना है. You just have to include just one component out of that non-current section, that is long-term borrowings, because that includes the total debt component. Here we are not taking into consideration the deferred tax liabilities, long-term provisions, because उनको हम liabilities नहीं मान रहे हैं, वो loans नहीं है, right? Understood? Yes or no? Then have the values, and just add it. You'll get the weighted average cost of capital. And even in most of the scenarios, you need not have to calculate the weighted average cost of capital also, because that's given to you by the company, or that is there in all the reports being published online. So you can use the value directly from that also. Like when you would be sitting on that job of a financial analyst or investment banker, a large number of things are given handy to you. People said me that we did not calculate the weighted average cost of capital manually on Excel. It is not important to calculate it. You can calculate it by using like this method which I told you. But in most of the scenarios, your answer would be wrong, because these estimations and projections are done by some other department. These are also involve the task of some people who are into the field of like kind of the projections and all. तो पूरी मैनेजमेंट बैठती है, सब कंसल्टेशन होता है, नॉट अ वन फाइनेंशियल analyst or investment banker can predict that. Okay, so a large number of considerations are there and that figure comes up everywhere. And all these estimations, it is not mandatory that they would be 100% correct. These are just the future estimations, just the kind of the projections that you are making for future. That might not always be correct, but it is just an approximate measure. Okay, because ultimately the price of everything in the market is determined by demand and supply. Paytm ne apni valuation kari, the price came down. Like Zomato came up with its own valuation, and high valuations they gave us, like the price came down. So nothing which the company is expecting, it is not mandatory that the company would be listed at that price only. Similarly for WACC, the WACC that you have predicted, it's not mandatory that like you would be able to give that to the holders. Because ultimately before this COVID-19 pandemic in 2020 early years, people predicted that 2020 gonna be a very good year. They had good financial projections and good cash flow projections and good profitability done. But at the end of 2022, everyone was damn affected. So you cannot make an exact projection. These are just the estimations. So ultimately, just do not blame yourself, and ultimately the values are not correct and like not matching with the future of the company. Like when we looked in 2025, it won't match. 100% it won't match. Okay, because things keep changing on continuously. And that is why like the other courses on financial modeling, I don't just randomly like predict the future of the company. Okay, I take into consideration the kind of realistic factors as well. And I let me get back to that point once again. So this was a weighted average cost of capital. The second thing related to that, they told me how to predict the growth rate. How do we calculate the future growth rate? See, one formula has been like mentioned in the modules also, like when we used to have the retention ratio into the return on equity. Company ka retention ratio and the return on equity, and just multiply that and like you will get the growth rate of that company. How to calculate the retention ratio, the value like you people would get from moneycontrol.com or like from the annual report, and to calculate it like physically. So dividend ratio hai, total में से when you will subtract the dividend ratio, वो remaining to retention ही हो गया. And how to calculate the return on equity, again it has been discussed in detail. Okay, but people have found that when they are using this formula now, the growth rate coming out is to be wrong. Okay, because it's just a random number that you are taking and it's a theoretical formula. Like this was suggested by Mr. Warren Buffett at some point of time. Maybe that thing worked for his own company, but something that is working for his own company, it's not always mandatory that that thing would be working for the other companies also. How can you like use this formula for a loss-making company? For a loss-making company, the return on equity would be negative. Then the growth rate would also come out to be negative, right? Right or not? Give me a yes or no. When you are using it for a loss-making company, the ROE will come out to be negative, right? And the growth rate would also be negative. Then how can we use it for all the companies? Give me a yes or no. Will the growth rate come out to be negative for a loss-making company when this ROE is negative? Yes, yes, yes. Okay, okay, okay. Fine, 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 fine. Okay. So again, a large number of the other factors are used in making consideration for the growth rate. It is just a predictable number. You have to see the overall growth rate. Maybe you have to see the company का share price कितने से बढ़ा है, or total market capitalization by how much percentage it has increased by year on year. So you can take that as a growth rate. Similarly, if the enterprise value of the company is increasing, then you can take that as the growth rate. You can calculate the percentage change in the enterprise value, like the past circle, like people can compare like with this year, then the future year with this year. So people can calculate the percentage change in return and take out the average of all the returns. And that people can take as a growth rate. Similarly, this figure can also be taken by all the financial analysts, by all the credit rating agencies who are predicting the growth rate of the company also at some point of time. Okay. Similarly, that growth rate can also be taken. So again, this growth rate is again something which cannot be predicted in particular. You have to take into consideration the management commentary, your own analysis. Your growth rate can be different. Some other companies' growth rate can be different. Like just tell me a yes or no. I'll share one point to you. Like some people say that the GDP of India will grow by 7.5%. Then the RBI comes, the RBI says that the GDP of the country will grow by 9.3%. Then on the other hand, like result comes and says that the GDP of the country will go by 10.3%. Then ICI Securities or Kotak Securities or like Edelweiss Securities come into place and they say that we are like diminishing the forecast and the country would grow by 6.9%. Yes or no? Have you heard that? Have you like witnessed that? And same for the other components of the company also. Okay, the company will grow at 2%, and like some people come and say that, like that the company will grow by 4%, 5%. But in reality, we find out that the actual number is different. Yes or no, chat box? Yes or no, chat box? Yes, yes, yes. Yeah. So that is the thing. So do not panic if your growth rate is coming out to be different from your peers. Okay, it is your own assumption. Just you need to have the facts to back up that. And how you're gonna have facts to back up that if you know the 6-in-1 course on investment banking. It's not a promotion. I'm just telling you. Okay, it's just like you have the concepts in clear. You know, the company is strong here fundamentally. You have the points to justify that, and these people are justifying on their own grounds. How to justify that? The course is all about that only, right? So that was one thing. So like now, like some points in general, people ask me that how can we like predict the debt in future? Like if a company is having like 200 crores of debt in 2017, then 300 crores in 2018, then 400 crores in 2019, how to predict it like in future? All the financial modeling course everywhere in India or like wheresoever like you are here, because we have people here from Singapore as well. Okay, I just saw a friend of mine who like just enrolled into this course from Singapore, right? So like welcome Manjunath. So the thing is that yeah, so wherever like you are doing this analysis, okay. So the thing is that debt, how like you're gonna project the debt? Okay, so see, if the debt has been increasing for the company over the past year, okay, so on the basis of that financial modeling, when you use the LN formula that has already been discussed in the modules, and this point has been stressed in the modules also, but I'm repeating it once again. Then you'll use the growth rate of the debt. Again, the debt would be increasing in the subsequent year also. But it can happen that in the current year, the company has planned to reduce its debt, or the company has already paid off its debt. The company like is using the cash flows, or company like is planning to be like net debt free, as happened in case of Tata or like Reliance or like various capital goods industry also. They are almost becoming debt free. But in the past, the debt proportion has increased. And suddenly in the year of 2021, the debt has become almost zero. Increasing trend tha and ekdam se zero. So if someone is predicting the trend, the increasing trend, then in 2021 also, the debt would have increased and his financial modeling or future forecasting would be wrong. So that is why you cannot do it blindly. You have to read the management commentary. You have to hear to management what exactly they're planning to do. If a company is having a current debt of 5,000 crore and company says that we are planning to reduce debt by 2,000 crores in the next year, then 2,000 crore in next year, then over 5,000 current hai na, you have to do like 3,000 for the next year, then 1,000 for next year, not on the basis of the previous analysis, but only on the basis of the management commentary, because they are also forecasting. So on the basis of that, you have to forecast only because the top management has said they are doing that. Then all the previous values are raised then. You have to do it on the basis of the future value only. Understood? Because randomly you can do it like for the sake of simplicity. Like see, if you have like no such corporate news with you and like everything is going plain, then you can predict on the basis of the rate only, which all the financial modeling classes or like other courses tell you. But what I believe in making you understand in the most realistic manner. Okay, so agar ye scenarios aayenge, your calculation would have to be changed. Understood? Yes or no? Otherwise, you people can use the ln function if everything is on a plain figure. अगर कुछ management commentary नहीं है, कुछ नहीं है. Understood? Yes or no? Yes, yes, yes. Okay. And see, the same thing goes for the amount of depreciation also. The thing has been discussed in the modules also. If a company's amount of depreciation has been in an increasing trend over the years, 200, then 300, then 400, then 500, then 2021, like it came to 600. Again, you cannot assume an increasing depreciation. You can assume it on the basis of taking the same growth rate by using that ln formula, like which we talked in the modules. That's fine if like everything is fine. But the same thing I like kind of discussed in the modules also, there can be some new acquisition of the machinery also. So that also like you people have to take into consideration and calculate the depreciation. So ho sakta hai, instead of like increasing from 500 to 600, the kind of depreciation rose from 500 to 1000 because large amount of machineries were required. So you have to see the annual report of a company, because in the notes to accounts, which I told you also, like when you go to the plant and machinery ka notes to accounts, you get to know that when the machinery was acquired. And from that date to till date, you people can calculate the depreciation. And that has been discussed in the modules. To see the modules for depreciation, depreciation clarity, how to project the depreciation would be clear. Similarly, if a company is discarding or throwing off existing machinery and not acquiring a new machinery, that depreciation can even come down from 500 to 300 or 200. Yes or no? Because machinery agar nahi hogi, to depreciation bhi nahi hoga. Then that 500, it won't go to 600. It will just come down to 400, 300 or 200. Yes or no? Yes or no? Yeah, so these things you have to see like through the annual report of the company. People will tend to like project it, matlab random basis, like, but you have to see it. One point I'm stressing upon, one point, when a company has just started or the company is in a growth stage, the depreciation would be less. Just note down this point. When a company has just started or the company is in the growth stage, the depreciation would be less, but the acquisition would be more. Because at that time, the company has no assets. The company is just buying the assets. So in the starting years, the depreciation is less ultimately because your asset, your plant machinery is fresh. Okay. So in the starting years, the amount of assets or the capital expenditure would be more. That is why this new platform startup companies like that we see get listed on the stock exchanges. Why they have the enterprise value, not the enterprise value, the cash flows as negative because their capex bahut zyada hai. So these companies will have huge capital expenditure, but no depreciation or a lesser amount of depreciation. As they go ahead, they will have a larger amount of depreciation and lesser capex because at that time the assets are in place, but obviously the depreciation would be charged because the assets are becoming old. Yes or no? Understood the logic? Yes or no? Yes, 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 yes. Okay, okay, fine. Okay. So like this was the thing that you need to know. So be it like, and the same goes for the projection of share capital also. You need to see, is the company raising some more share or not? That you have to see like within the share capital of the company also. Share capital, like if the share capital of the company is increasing, it means the company has like issued like some more shares to the company, like to the people. So company के shares बढ़ गए market में. The company might have come with like kind of follow-up public offer or FPO. Like recently we had the Ruchi Soya ka FPO like in the market in India, like when we talk about. So these things have to be taken into consideration. Each and every item of the profit and loss statement at the balance sheet has to be taken into consideration. But for the sake of simplicity, people just tend to like project the profitability of the company, the EBIT, and from that they make certain adjustments. Like they make the adjustment from CAPEX, from working capital, and then calculate the enterprise value as we did in the modules also. But each and every item we have to forecast. Though like a large number of items like might not be changed also because your expenses and all like they might not change. But at least for the main things, debt, share capital, depreciation, assets, the whole balance sheet is important. Okay, you need to see each and every item, and that is why financial modeling takes time. And every course, like they prepare the financial model like in just 30 minutes and say like basically the model is ready and perfect to go on. but it takes 24 hours to 30 hours if you are like projecting each and everything. And that is why financial analysts and investment bankers takes months and months to value a company. Some takes even years to value a company. Why? Because they're analyzing each and every item. And that is the thing you need to know. Now, someone asked me how to project the future of a banking company. Same as all the companies. The method is same as financial modeling. So just have an interest component there. Okay, because the banks have an interest income. Okay, so by the same method, you have to calculate and project the interest income by using the LN function. Okay, as a layman one. Okay. And the second question that person asked me, he said, "Ki NPS bhi to bank mein like ho sakte hain. And from those non-performing loans, the bank won't be receiving the interest payments, right?" To be very frank, and that is the harsh reality of the banking system, and that is why banks fail or the banks go into bankruptcy, or why the banks were not doing well in the COVID-19 pandemic. You cannot predict the NPS. कि कौन पैसा देगा कौन नहीं देगा. You cannot predict them. That is the biggest drawback. You can just have the NPA data. Like if you have some NPA data with you, you can try to project if that NPA data is kind of reducing, then you can like tend to project that it will kind of reduce in future. If it's increasing, so then you need to see the management commentary also, because now the banks have started to say that the non-performing loans have started to reduce and people have been paying the interest and all. So that is something you need to see, and that would be directed on the financial statements only. But the simple way is like just use the rent function and try to like project the interest payments, because bank valuation karna is very tough, and like people are always wrong in the banking valuations because they do not know when does an NPA come in. Because if you people have taken loan from me, then you people have no idea ki I will pay you back or not. Even if I say you like I'll pay you tomorrow, day after tomorrow, 2 years, you people won't trust me. So you cannot predict the exact date when I'll be able to pay back my loan if I do not have money with me. Okay, so that is why like just do it in the normal scenario, like as in the case of banks, like as in the case of the other companies, because you physically like you people won't have data. Like for example, like let me take a random name, just don't get offended. Like for example, like we have Raghav here. Okay, so for example, if Raghav is doing the future analysis of the State Bank of India, and he's the financial analyst of JP Morgan Chase and Company. Okay, so Raghav, he won't have the data of the clients of State Bank of India. मतलब कि मौर्य ने लोन दिया है नहीं दिया, अरुण ने लोन दिया है नहीं दिया, Pratyush has given loan or not, Pavitra has given loan or not, Sakshi has given loan or not. He won't have that details. He would just have the total interest amount received by the banks. Yes or no? Am I correct or not? Yes or no? Will that person have the data for like of the personal clients of State Bank of India? Yes or no? Yes or no? No. Fine. Yeah. So if that person is not having the personal data, how can you like project it? So he has to project, मैं क्या बोल मतलब कि मजबूरी में, like on the basis of the existing interest only. But if the management is saying that we have been recovering loans of 200 crores and all, then an estimated figure of 200 crores he can put in. Okay, and he can see what 200 crore, again like it's quite difficult, because वो 200 crore में ना, like some person might have received the loan at 12% rate of interest, like his CIBIL score might be low, or like the credit score might be low. Some persons like credit score might be too high, so that person might have received at like 6% rate of interest. Again, you cannot like predict that, but all the valuation would be wrong. So just do it in a simple figure in a layman scenario, and if there would be any of the changes, your management will help you in that. So do not worry, just understand the concept of financial modeling. That's it. Okay, so that's all for today. If any of the queries you people can mention in the chat box, and I'm planning to have a kind of live interactive session with you in which you people can unmute yourselves, because like we are having like 10 to 15 groups like at presently who have opted for the live sessions. Some groups are having like 250 members, like which is the maximum capacity on WhatsApp. Like some groups have 200 members, like some have 50 members. Okay, so when all of you people join, it's quite impossible for me to make you unmute and like talk to each other. So I'll be having a separate session for like 20 people each day, I'll try to have like at least for 30-40 minutes in which I can understand like how like you are thinking about the course and people can talk to me also. Okay. Because I'm not always available on the like the business contact like which has been shared to you. Okay, like it's handled by someone else. So like if any queries as of now, you people can mention in the chat box and I'll be more than happy to solve it. Any queries? Yeah, Pratyush, the depreciation one has been mentioned in the modules. You can go back and even like I have given you a very simple example of the depreciation figure that how to calculate that. Just go through that. How to calculate terminal value. That has been done in the modules and that's the most important component of like doing it. Okay, just watch the modules. Any queries, ask me. Anuradha is asking me what is non-performing assets. See, the non-performing assets are something like, for example, if I have taken a loan from State Bank of India and I'm not able to pay back that loan, so that becomes a non-performing asset. For those who have joined the course recently, by when we should look to complete the course, and anything we should keep in mind, any suggestions or briefing, please. Like for all of those who have done the course, like try to complete the course in max to max 1.5 months, like the day you joined the course. I won't have like currently the date at which you joined, but my team would be having that. So like try to complete that in like 1.5 months. And after that, like we'll be giving you a short task on financial modeling. And after that, you are good to go. But the live session like will go on forever. Like just start watching the modules and like any queries, ask me. Okay, so like at your pace, and like do not like binge watch the modules. Like try to watch everything. What if statements of loans of a company are not given to banks? How will they project it? And they will use a particular, see, the statement of loans are like never given. Like for example, if Raghav was like working at JP Morgan, like the statement of loans of State Bank of India, it would never be given to him. Like he would just have to project on the basis of the annual report of the State Bank of India. Okay, like this has been the interest payment in 2017. The interest payment rose in 2018, it rose in 2019, and then it will increase in 2020, like on the basis of the past data. Because ultimately, when the interest income is increasing for the banks, it's good for the bank ultimately. So Raghav, like working at JP Morgan, like he won't be getting the loan report of the clients of State Bank of India. Will just get the annual report of State Bank of India, and on the basis of that, he has to project. But if he gets, he won't get like that only. Like the management of his company might contact with the management of State Bank of India to give the reports. But State Bank of India, like it won't give it because it's a public sector bank and वहाँ पे काम कैसे होते हैं सबको पता. Got it? Now, yeah, the non-performing loans are same as non-performing assets. It's like one and the same thing. Which further courses to do for like top investment banking job? Like this one is the best one. After that, you can go for skill building courses. Rajnesh Prakash. Rajnesh Prakash, after this course or like during this course, you people can go with the skill building course for Excel, Tableau, Power BI and dashboards because ultimately like they demand the skill there. ये skill उनको चाहिए ही चाहिए. So that's like you people can like enroll for that also if you want, but that's a separate one. I'll share the details on the group also because that is something that they would ask for. Because Excel advanced macros, tableaus, Power BI dashboards you need to know. अगर वो नहीं आते, so like even this knowledge of investment banking is nothing for you. Like you need to have the practical aspect of like using these tools. Okay. Okay then. So since there like no queries, like we'll just wind up the session. Okay. And we'll meet next week. Up till then, you can take care and all the best. Thank you guys. Thank you. Thank you.